Welcome back to TechKidFX for another price prediction update, and in this video I'll be giving you a price prediction update on Quant, whose current price stands at the $109.3 mark, and here on TradingView the market is down by 0.27%. And in this video I want to give you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the Elliot structures, the Fibonacci's, and also the key areas of support and resistances. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Quant chart. Quant from the all-time high had been seeing lower prices in this massive ABC corrective structure, which took us back to around the $40.1 mark, and after seeing that low we have been seeing a very nice bounce to the upside, which has been obeying the Elliot structures, and that is better seen here on the 4-hour chart, where you can see I have this Elliot structure in blue having the wave 5 making its peak at around the $229 mark, and also completing the formation of a higher Elliot wave count 1 to the upside. And whatever we expect next after seeing the formation of a higher Elliot wave count 2 is a bit of a retracement to the lower side in the formation of a higher Elliot wave count 2, and that is what has been playing out here on the Quant chart. And here on the 4-hour chart we have a very nice chart pattern that is in formation over here, which is a trend continuation pattern, which is a bear flag, and we can have this as the pole of that bear flag. And you can see we have seen a breakout out of the bear flag to the lower side, and because this is a chart pattern, this is a trend continuation pattern, there are chances that we might continue pushing even lower and maybe make a new low below the low that we have at around the $94.4 mark. So that is the very first possible scenario that I'm expecting to play out here on the Quant chart, and that is fully supported because here on the 4-hour chart you can see that the key area of support, we have lost the key area of support at around the $110.9 mark, and after losing a key area of support there are chances that we might see a retest of that key area of support. And once the retest is in and a success, then there are chances of continuing to push even lower. And jumping to the 4-hour chart for further analysis, here on the 4-hour chart I want to base my analysis on the formation of a higher Elliot wave count 2, which I believe might not have come to a complete, and that is so because in the formation of a second wave we also expect to see an ABC corrective structure, and there are two ways we can have that ABC corrective structure here on the Quant chart. And the very first way to have that ABC corrective structure is having this as a massive wave A. Then I'm expecting a bit of a bounce to the upside in the formation of a higher Elliot in the formation of that wave B, before we see an impulsive movement to the lower side in the formation of that wave C, giving me a new low below the low for that wave A, and also complete the formation of that higher Elliot wave count 2 to the lower side. That is the very first way to have that ABC corrective structure, and sketching out a minimum target area to the upside in the formation of this wave B, using the Fibonacci's, connecting it from the high of that wave A to the low of the wave A. That gives me a minimum retracement area to the upside between the fib level 0.382 and the fib level 0.618, and I can mark that target area here on the charts, which perfectly lies between the $177.1 mark and the $145.5 mark, and that is the minimum that I'm expecting that wave B to the upside to do. Once we manage to see a bit of a recovery, get into this target area, then I'll be terming that as a wave B, then expect a bit of a retracement to the lower side in the formation of this wave C to fully maximize the formation of that second wave. That is the very first way to have that ABC corrective structure. The other way we can have that ABC corrective structure is assuming that that is the wave A, then we saw the wave B, then whatever we are seeing over here is a continuation of that wave C, and I'm expecting a new low in the formation of that wave C to the lower side, and that is also supported because of the bear flag that we have on the 4-hour chart, and also another chart pattern that is in formation here on the 1-hour chart, which is a head and shoulders pattern. And if I draw it out, we can have this as the left shoulder of that head and shoulders pattern. Then we have seen the head, the neckline, and also the right shoulder, and right now we are seeing a breakout out of this chart pattern to the lower side, and that is after losing the key area of support at around the $110 mark, and sketching out a minimum target area to the lower side once we see the breakout out of this head and shoulders pattern. And the minimum target area is given by the height between the head and the neckline, so I can get that height and then place it below the neckline, and that gives me a minimum target area back to around the $90.8 mark. And before we get to that target area at around the $90.8 mark, we need to have in mind that we have a key area of support at around the $100 mark, and once we get to that target area, that is that support line, there are chances that we might get to that support line and then see a bounce to the upside. And in case we don't see that bounce, then I'll be expecting us Quant to lose that key area of support, even see a retest of that key area of support. And once the retest is in, then we can fully maximize the target area out of these for the breakout out of these head and shoulders pattern at around the $90.8 mark. So let's be patient and see how that plays out, and I'll keep you updated on that. Also taking a look at the indicators to see what movements will be supported on the RSI. On the RSI, we are trading at around the 45 mark, meaning we have massive room for us to support any movements to the upside. Also taking a look at the MACD. On the MACD, you have printed a bullish cross, and that would mean higher prices are coming our way, but we are seeing a bit of a decrease in the on the buying momentum here on the MACD, meaning we might be able to print a bearish cross very soon, and that will be supporting lower prices here on the charts, and also the breakout out of this head and shoulders pattern for us to continue pushing lower, make a new low in the formation of that higher 12 count 2. And that's the update for Quant.